Good morning, everybody. It is Memorial Day weekend 2021. It's Friday, so it looks like we have a little bit smaller than average crowd, not much. Yeah, some people escape wherever it is they are. So I wrote an article a few days ago telling folks to de-risk your portfolio now. Now meaning next month or two. If you got that on Fundamental Trends, it is a free article. So you just need a free library card. You can get that here, free library card, and then you can follow along. So in general, I want you to consider that we might be at roughly peak earnings right now. And why would that be? Well, interest rates are as low as they can go, so financing costs can really only go up. Second, supply chains are disrupted enough that you're seeing some PPI price pressure, which is likely to be temporary, probably only lasting until next year. But I believe that as wages creep up, that would offset PPI falling. So as wages go up and taxes go up and CapEx goes up, corporate earnings probably are level for an extended period, or they even come down. Adjusted for inflation, we know that corporate earnings haven't gone up in about 8 years. So the real earnings, adjusted for inflation, are basically flat for the last 8 years. So why is the stock market at all-time highs again, even higher than before the pandemic? It really just comes down to liquidity. It comes down to the excess money in the economy. One of the charts that I don't have for you today, but it's pretty easy to find on Federal Reserve website, is that the money supply has started to shrink. I talked to you about that 2 or 3 months ago, and now it's happening. I would expect the rest of this year to be choppy. We are going to see the zombie hunting begin. You're going to have a lot of rotation, and certain stocks won't come back once they correct. So it's going to be important to be a good stock picker, or at least an industry picker, because the broad market might be just about done going up. Again, I showed you a chart that sees the S&P 500 at about 5,000, 5,100, 5,200, right in there in the next few years. But given that we're already at 42, 43, that's not a lot of upside for, say, 3 or 4 years. That means the gains are going to be selective. I would point out to you that when Warren Buffett made the biggest jump in his wealth, it was during a period of time where the market essentially moved sideways for about 7 or 8 years, chopped along. Some sectors up, some sectors down, finding opportunities. So it's going to be important that we find our opportunities. If you have a portfolio that is heavy in energy, then I would suggest that you de-risk that right now, because we are seeing the activists start to win in the boardroom. It's been a long time coming. So the rally in oil stocks, if it's not over, it's close to over. And even the pipelines with oil are going to come under pressure again in the next year or 2 or 3. Again, the only oil stocks that I think you can even consider to invest in are Pioneer, which is best of breed, exclusively in the Texas Permian, a little bit of New Mexico actually. And then Total of the majors, which is the only one that really has taken clean energy seriously. Others pay it lip service. Others flat out lie, like Exxon. So Exxon lost 2 board seats this week to climate-friendly activists. And they've already pointed out that the dividend doesn't make a lot of sense. And it doesn't. So I would like you to think about what I think is going to be a short investment for me at some point, Exxon. If Exxon reduces their dividend, they cuts it in half the way AT&T did. What do you think their shareholders will do? The AT&T shareholders threw a fit. That's all you saw in articles and in social media for a week. They're wrong. They're dividences, but it is what it is. So when, not if, when Exxon cuts their dividend, because they will have to make this transition to cleaner energy, shareholders probably will not respond well to that. We've already seen a lot of the companies in the oil space start with dividends that aren't fixed. They have variable dividends. So they'll have a base dividend that's real low. And then from year to year, they announce whether or not there'll essentially be a special dividend or more of a variable dividend on top of the very small fixed dividend. And if oil prices are basically about as high as they're going to get, excluding a war, which is where I think we're at, excluding a war, oil prices don't have much upside. Think about the fact that the Middle East has been holding back their production of the cheapest oil in the world to try to get the price up. And they've done a decent job. The oil glut is basically just a little bit above average now, so it's not even, I would even consider it a major glut anymore. There's about 1 million more barrels per day used than produced. And given 7 or 8 years, most of the oil in storage would be gone. But do we really think that in a day and age when EVs are coming on strong by the middle and end of the decade, that that's going to be their approach? They're going to want to sell as much oil as possible. So the optimal price of oil is probably somewhere in the 50s, given what Russia has said and what Iran has said. There's only a handful of countries, Saudi Arabia being the main one, that need oil up in the 70s. We saw that once oil got up to the price range that it is now, Saudi Arabia immediately sold a part of Saudi Aramco. So think about when a country like Saudi Arabia starts to sell their prize asset. It's been going on for a few years. They still haven't sold as much as they said they wanted to sell. And I would also say, if you believe that the picture for oil is bright, let's say you're bullish on oil, shouldn't you be more bullish on all the alternative forms of energy? And think about this. If the price of oil goes up, that makes everything in alternative energy more competitive because they'll sell more clean energy. So as oil prices go up, clean energy stocks go up more than the oil stocks do. When oil prices go down, the clean energy stocks go down less than the oil stocks do. There's no reasonable argument to own oil stocks if you're a rational investor. So if you think the price of oil is going to stay firm, it's possible. I don't think so, but it's possible. I think it's going to be in the 50s for the most part. Then why wouldn't you rather own something that's going to go up more, go down less, and has a better long-term future? Got an article coming out right after the show. I haven't quite updated the cash secured puts, but covered call thoughts that you really want to get rid of basically every financial out there. I'm going to show you just a couple of parts. And I want you to see how the screener works again, because I really think that you should be using this. I can look at financial sector, rank it by weekly RSI. I can even look at just the bigger companies, the companies over 2 billion. And we can see all of these companies that are super overbought. So let's look at a couple of charts with that. To just get back to where it was, which was probably about right or too high. It broke out. And again, it doesn't even matter which one we look at. I can pull these almost at random. Blackstone. There's credit card companies, private equity firms, the insurance companies. Look at all these charts. The money managers, right? So you could be asking yourself, if you haven't been a momentum trader your whole career, do you really want to jump into that game now? Interest rates probably aren't going up. Maybe a quarter point here or a point there. But we're not going to see 4 and 5 and 6% interest rates. Going back to the financial crisis, we're above those highs now, exclusively due to QE as far as I'm concerned. Most of these are going to come back down into this range. Will it hold right here? I don't know. I don't think we have a recession coming anytime soon. So I think the odds of getting back down here are pretty slim. But once it becomes apparent that interest rates aren't going to go up much, and you've been reading the news, you've been watching all the new estimates come in, virtually every investment bank, commercial bank, money manager, they're all starting to say what I told you a month ago, and actually has been my refrain for years, but that I reiterated a month ago when I wrote that article about inflation and deflation. Deflation is a real boogeyman. All the inflation is going to be out of the economy by next year sometime. This is a one-time adjustment off of a freak event that messed up supply chains, and now it's all going to sort itself out. Over that next year, there are companies that are going to do pretty well. Companies that benefit from CapEx spending is one of the places we'll have to look. Other companies that are forced into CapEx and spending rather than supplying are going to probably, again, have a hard time raising their profits. So do we just keep paying more and more and more in valuation? Or do the valuations somehow just have a reversion to mean? Reversion to mean is a thing because it's a thing. We say that because it happens over and over again. So when you take a look at the financials, this is one of the main places where you're going to see a reversion to mean. 20, 30, 40% drops, 50%. And again, go through this screener and just look at right here, sort it by any time frame you want. We use the weekly charts because it gives us the best trade signals. And just look at all these financials that are overbought. All these people who are buying the bank stocks because they can pay dividends now are going to get crushed on the share price side. They're going to give back all of their gains. When you take a look at a company like Citigroup, you think to yourself, let's take a look at that going back a decade. Go back to say all. You look at the stupidity of this stock. They've almost bankrupted this company 3 times. Right? There's no upside to the stock. Probably belongs down here about where this trend line is, in here somewhere. So from 80-ish to 60-ish is a 25% loss. But hey, I think they pay a dividend. So I don't like energy and I don't like financials. And I don't like companies that are high in debt. They have a lot of CapEx coming, like a lot of the REITs. I'll show you how badly the REITs have gotten back to overvalued next week. Where do I want to be? It's going to be clean energy. It's going to be tech. It's going to be the things that have a secular future. And you buy them on the pullbacks. And there's something else. Last summer, I told you to buy Bitcoin when it was under 10,000. I said, hey, put a single-digit percentage into Bitcoin. Well, now I'm telling you, buy Ethereum. If you didn't watch this interview, you should watch it. Because what we talk about here is pretty important. And right here, the flippening. I believe that Ethereum in a couple of years is going to be more valuable than Bitcoin. So I had some limit orders in, I put them in probably a month ago at 2,000 for Ethereum when it was around 4,000. Woke up one morning last week, talked about this in the Forex Analytics interview, and suddenly I own Ethereum at 2,000. So the reason you want Ethereum, and you need to read up on this, I'm not going to go through it all from start to finish, is that it has more uses. Ethereum is more functional than Bitcoin. While Bitcoin might actually end up being a digital gold, especially when the ETFs come, I don't know that it's something that you buy and hold forever. I believe that Bitcoin, you probably want to buy a little bit of it again now that it's down in the 30,000s. I have some limit orders in 35,000 and 30,000. And I'd probably buy more at 20,000 unless we were expecting bad news on the ETFs. But as I say in this interview with Dr. Sean Stein-Smith, the financial industry usually gets what it wants. Fidelity and 9 or 10 others have applied to the SEC to have Bitcoin ETFs. Now, I don't think there should be Bitcoin ETFs, because I think that when people put IRA money into those ETFs, they're going to get blown up. I don't think they're going to understand what they own. I think they're going to jump on the rally because of FOMO. I think when Bitcoin spikes and crashes, they're going to blame somebody else. I've sent letters to Janet Yellen and the SEC saying you shouldn't have Bitcoin ETFs, or at least don't allow them in IRAs. But I'm also against most of the commodity ETFs. So they still have those. So I expect that they will do the ETFs because Wall Street wants it. It's not good for you unless you're a pretty smart trader. So if you buy Bitcoin now before the ETFs are available, I think Bitcoin to 100,000 is probably likely. I don't know about 500,000, which some people talk about as well. If we just get this share of what gold has, it's the wrong way to look at it. Gold is physical. People have gold all over the world. They show it to each other. They wear it. They use it in cell phones. There's uses for gold. There's a reason why there's a lot of gold being held. And eventually we'll start to melt down some of the gold that central banks hold, because there is industrial uses and jewelry. And eventually it'll get too expensive to pull out of the ground. I said last summer, don't use your brokerage accounts to buy Bitcoin or Ethereum. Take a look at what you have saved in the bank, and then take a single-digit percentage of that and put it into cryptocurrency. And the two to own are Ethereum for the long term and Bitcoin for the ETF trade. So once Bitcoin goes into ETFs, it'll spike, and you're going to want to trade out of it at some point. And don't try to be too perfect. Have a scaling out plan. With Ethereum, I think you can hold it for a very long time, because from a functional standpoint, it can really operate as the true bridge between cryptocurrencies and smart contracts and NFTs and the rest of the DeFi sector and the real monetary system. In essence, it'll become a shadow of the existing financial system. And because interest rates are going to stay down a long time, and we don't want the banks to actually go out of business, but there's already been consolidation and pressure on them and a lot of change. I have told you that PayPal and Square are very well positioned for whatever comes in cryptocurrency, from central bank currencies to Bitcoin, Ethereum, and whatever else might pop up. Like, they have the functionality, they have the tools and the technology to transact, maintain ledgers, to be nodes. So I think Ethereum is the better long-term argument. I think Bitcoin's got a heck of a trade coming. They're both beat up right now. People are confused. But if you take a look at the ticker tape on Bitcoin, and you can do that if you know how to do that, just using the various tools that are out there through the first companies, you can see that institutions, or at least bigger investors, are starting to buy Bitcoin. So little people sold Bitcoin on that crash. They panicked. And now there's starting to be some accumulation in both Bitcoin and Ethereum. So I will put out a little article today with the links to the two places where I buy cryptocurrency. Just open up accounts there. One is real easy. One's Robinhood. That's the easiest way to do it. And then you don't have to deal with custody things. You're not going to get perfect execution. You'll pay it just a little bit more for your cryptocurrency through Robinhood, but it'll make your life real easy. If you really want to learn more and more about cryptocurrency, Coinbase is the place to be. They're smart, they're set up, and they'll probably have a role with the crypto dollar. So that's the overlap that you have to look for is, okay, when the crypto dollar gets introduced, who can turn a Bitcoin into a crypto dollar? Who can turn an Ethereum into a crypto dollar? The government is never going to allow Bitcoin to be transacted on normal financial networks. It's a commodity. Bitcoin's going to trade like a commodity. I've been saying that for a pretty long time. It will never be a medium of exchange. Watch this interview with Sean Stein-Smith. Talked about this extensively. Money has three functions: medium of exchange, unit of account, store of value. Bitcoin is going to have the same sort of store of value characteristics as gold. Just like you don't walk around handing gold to people, you're never going to walk around handing Bitcoin to people. Bitcoin isn't something that you're going to buy your pizza with. It's simply a digital way to store wealth. And when it spikes up in price, you can be assured that it's going to fall back down. And in the long run, I think Bitcoin has a major problem because dollar is going to get a lot stronger off of this bottoming. We're getting to a day and age, because supply chains are moving, because machine learning is getting better and better, that a strong currency is what you want. This whole neocon idea that you wanted to have a weak currency so you could sell more overseas has been a bullshit argument from the beginning. But now that export economies are exporting less, and it's all based on quality and technology, not how much you can underpay people, you want to be like Switzerland. You want a very strong currency. And I'm telling you, the dollar is going to get very strong someday. Not too distant future. Next decade. We're going to end up being a gigantic Switzerland in the 2030s. Now, the path there is tradable. I think the dollar is going to bottom here shortly. Then it's going to start to rise. Then it'll retrace a bit, and then it'll rise again. Elliott wave stuff. I was talking to a technical trader last night for 2 hours on a telephone. And, I've studied Elliott wave theory for 20 years. And he uses an AI that overlays Elliott wave theory. And here's the thing that we both came to the conclusion watching it. A lot of times Elliott wave theories break because there's a change in something that would lead to the herd behavior that Elliott wave predicts. Not that good of a theory, to be honest with you. It's just a way of saying that people run in one direction, they run into a wall, so they turn around. They bounce off the wall. When they run the other way and they bounce off that wall, so they run back. And after 3 or 5 times, people say, hey, I don't like that anymore. They either quit playing, right, like a lemming committing suicide, or they do something a little different. They say, I don't want to play in this game anymore. I'm going to go play in that game over there. Now, I've told you, baby boomers are about to become net withdrawers from the stock market, and the millennials are getting in. But what have I told you? The millennials are better traders than the boomers. So things are changing a bit. So all these people who are talking about a weaker dollar, they're wrong. Bottom line is they're wrong. In the long term, the dollar is going to be extremely strong. Now, does that mean it can't trade in cycles? I showed you this chart 100 times. Dollar is going to get down to around here, probably rebound. Then it could fall back into this area here, in which case that we have a recession. The idea that the Federal Reserve printing money is going to make the dollar weaker against other currencies is just stupid, because nobody else has the strength of the economy that we do. And if we are printing money, they have to print money. Because the rest of the world economically will pretty much always, among the major economies, be worse off than us. We have the best real estate on the earth. The combinations of things that make up an economy, there's nowhere else on earth that has what we have. No one. And there's no one within 2 generations catching us. So as we help the world rebuild, as we essentially drive growth globally, there'll be challengers. You got the commies, you got your despots, Putin, Xi. Why would anybody trust them? And why would anybody even trust the Europeans who shit in their own bed over and over again? I mean, theoretically, the EC and the Euro should be pretty good competitors to the United States, but they can't get out of their own way. That weird infatuation of a third of the population with far right flirting with fascism and Nazism, 4 generations, 5 generations removed, now World War II is mind-boggling. It's just mind-boggling. The fact that some of that's gotten exported here sucks. It holds us back quite a bit. So as the world changes, the dollar will bottom somewhere near here, might rally, and it might get all the way back down in here if we have a recession. But the amount of fiscal stimulus that's coming, the last time we did this, was after the financial crisis. Right, so the dollar was crashed. We had a crisis. Everybody ran to the dollar on the crisis. We printed a ton of money and it came down, jitterbugged. Then look, as soon as the Fed started to taper, talk about tapering, the dollar jumped up. So now, will they let the dollar get down to this green line area? Maybe. They might let it happen. They might let the dollar get down to 84, 83, 82. All these people who spin narratives that are driving some of the comments in the chat room. The narratives have been wrong about inflation, about dollar collapse for 40 freaking years. 50 actually. What would make them true now? Why would our debt matter when everybody else has similar debts? Why? Why would it matter? Dick Cheney said in the early 80s, debt doesn't matter. Why is that? Examine why he said that. He's one of the smartest people to ever be in office. He's been a shadow president twice. Doesn't matter. As long as we're building something with the money rather than just spreading it around to the super rich, things will get better for the economy. But that doesn't mean that we have the straight up elevator in the stock market anymore. It is outright stupid to think that having broken out of two different trend lines, one more aggressive than the other, that the stock market really should be up here. We know all the valuations are out of whack. Stock market moves based on change. We are roughly at an inflection point in the next several quarters of people realizing that earnings really don't have a lot of room to go up. And if interest rates do go up a point, which is, I think, reasonable, why would you want to be in zombie stocks? If the dollar gets stronger, which it will, there will be a rebound here shortly. Talked about it in the interview with Forex Analytics. It'll bounce off of 90 or 89 or 88, somewhere in there. Right? How often have these charts hit my lines and bounced off? Pretty freaking often. Might not be perfect, but it's close. Dollars at 90. A lot of people are saying 88. I mean, remember, I drew this chart years ago. I barely updated it. So the dollar's going to bounce off of here, come up. Probably do about a halfway retrace right into this area. Then it's going to come back down. It's either going to triple bottom, 1, 2, 3, or it's going to break through. It breaks through if we have a recession. I don't see a recession before 2025. Just don't. All this money going into CapEx and moving supply chains is going to prevent a recession for a long time. It doesn't mean that we won't have a bad first quarter a lot of years. First quarter is usually where everything re-evens out. People get all breathy in March. First quarter wasn't very good. Take a look at the first quarters going back 20 years. The first quarter is where we retrench. Every year just about. So, buy a little bit of Bitcoin, add a little bit of Ether. Use the money. If you have any in oil stocks or bank stocks, sell those. Wait for a little bit of retracement in the market here, and then pivot to some of the better stuff. PayPal, Square, Apple, and Google, clean energy, instead of banks and financials and consumer staples and utilities and REITs. There's only like 7 REITs that I look at and say, I like these. People who invest in REITs, they tell funny stories too. Like REITs have outperformed the S&P 500. That's just not true. I show charts on that all the time. Take a look at SPY. Take a look at any time frame you want. And QQQ destroys it. We have a better QQQ now that has the option overlay. Look at that. Where this one starts. So since 2015-16, BST has been right there with QQQ. More recently, it's done better. In a choppy market, option selling is going to beat outright just buying and holding. I'm not saying I won't own QQQ. I'm just saying that in a choppy market, I'd rather have BST, which is basically QQQ, a few other stocks with an option overlay, covered calls. Either way, take a look at your Vanguard real estate fund, mainly REITs. Why do people think that real estate and REITs beat, and this is inclusive of dividends, are beating the market? It's made up. I'm a real estate investor guy. The money in real estate is made on redevelopment. Development and redevelopment. It's not made by charging rents. So if we take a look at this screener, we change sector to real estate. All that. We don't even have that. Real estate investment trusts. Take a look at the real estate investment trusts. Look at all the overbought. Almost overbought. We take a look at the real estate investment trusts that I like, or at least I'm monitoring. Iron Mountain, I think, is crap. Right? A lot of overbought. Here's one that I do actually like. It's been in our buy zone for a while. Comes back into 30-ish. Low 30s, a little lower. And you could probably sell cash your puts on this. There you go. If you got a fetish for real estate. Why these guys? Because they redevelop industrial real estate, and with supply chains moving, that makes a lot of sense. Beachy. Reason I'm spending 6 weeks or 7 weeks in Vegas the next year, because every idiot with a buck in his pocket is going to be in Vegas. I think this is going to be a lot like 2003, 4, 5, 6, 7, where people are flush with cash. We already know that that's happening. Savings rates are over 20%. Don't you remember just a few years ago, savings rates were low single digits? And with wages getting pressured up, all sorts of jobs out there, unemployment benefits ending for the low end, like people in the middle and up are working. We're pulling wages up on the lower end to get them to work now. It actually is real smart to have unemployment benefits last until the end of summer, because that causes upward pressure on prices without actually having to change the minimum wage. Got a local business here, flooring. They want a laborer to put in flooring. And they're offering starting $12 to $14 an hour, and they can't get anybody. Put it in a community room for our city. People laughed at them. Why would anybody go lay flooring for $14 an hour? It has nothing to do with unemployment benefits. It has to do with the fact that they can go work almost anywhere and make $14 or $15 an hour. Why would they want to do backbreaking labor? They could get an apprentice program. All the unions are begging for people. And they all start at 18, 19, 20, 21, 22 plus benefits. And then you become a journeyman in 2 years, and that doubles. So people who want to talk about entitlements and the falling dollar, you're buying a bunch of lines of bullshit, hook, line, and sinker. With 40 years of history are proof. Now, the market's going to be choppy because we're just too overvalued. But the economy is going to be good. And time, a little bit of inflation, will make the valuations more reasonable at some point. And while the dollar might have some speed bumps in the short term, in the long term, it's the best thing going. There's certain things that you sell the rip, certain things that you buy the dip. You buy the dollar when it's down. And it's about as far down as it can get, another buck or two. You know, there's only one more level down, and that would be if the economy really hit the skids again. But if this infrastructure bill and everything attached to it goes through by fall, the market will respect that and value the dollar higher. So the sooner that those bills go through, the sooner the dollar reverses its way back up. And again, not saying it can't retrace, but the idea that there will be a dollar collapse is one of the dumbest economic ideas that I've ever heard in my lifetime. And I do think gold will drift up to 3,000, might get there by spike, who knows. But again, even if it's range bound, which is another possibility, we know that the gold companies, which also have silver and copper, are making all kinds of money right now. And that will probably last for years and years and years, because they went through their period already of tightening up their ships, right sizing, picking the right project. All right, let's call it a day. Sell financials, sell oil. We're close to buying more clean energy, not quite. When the dollar goes up, everything will go on sale in the stock market. So do your selling and trimming now, then wait for an opportunity to get more fully invested. I suspect you'll be fully invested before the end of the year. That's my guess. Could be next year, but either way, your asset allocation has to reflect long-term realities. You have a rip right now in everything. Use the rip in the stock market, this huge rally that we've had, to get rid of your old man stocks. Look at their balance sheets. Look at their growth rates. If debt is high and growth is low, very simple, right? If debt is high and growth is low, dump them. All right. No webinar on Monday. I'm going to take the day off, and I will have the option article out here in the next hour or two. And this will be up on the web. And have a great Memorial Day weekend. I've got 6 articles to finish over the weekend so that I can start pumping them out before I go to Vegas. All right. Have a great weekend, everybody. Plant a flag.